Hi, this is Mark with Right Line Trading. It is 6/17, 2015, and today was a very difficult day to trade. We traded through a lot of chop, a lot of signals that did not align with our quantitative analysis of correlative markets, and they really kept us safe. Our market profiles also helped us immensely, and we'll be releasing that very shortly. Now, we had this absolutely, stellar trade on bonds. You can see correlative markets, red on this continuation trade. Now, bonds are $32 a tick, and the trade went 14 ticks. That was a $600 trade based on our ATM, and if we would have gotten it, it would have finished our day. It was the only trade that we had for the day on bonds. But unfortunately, we were busy in a Russell trade that really didn't go anywhere, but set up equally as well. Now here is the ES, and the ES really had nothing. If you go through here, you can see that this is early in the morning. Here was the trade. Now we were on the Russell end of this trade, and this finished our day. Obviously, this is another short with two quant lines, and this would have been another short with two quant lines, so there were additional signals after we finished that would have given us more money, but we just can't know that. So no way we could do that. Now the Russell had a really beautiful trade. Two actually. Now this trade to the upside had triple quant confirmation. Green bias, best order flow and momentum. Market profile was fine. It's not projecting on this chart. And it only went 5, while the bond trade that took place at exactly the same time went 14 ticks at $32 a tick. So we made $50 on this trade, and the bond trade made $600. Now then, if you tried to take this short, came right back up. Now the thing is, after we did an analysis, if you closed on a reversal candle, which would have been here, you'd be out of the trade. But if you stuck in this trade all the way, it eventually would have gone down 13 ticks. That's very risky. The best way to handle this trade is not to take it. And then, with this nice move up, now we had eventually moved over. We got this entry, which didn't stop us out. It came close, but we went down for 17 ticks. So we had +5 and +17 on the Russell. Then on crude, really, this is a move to the downside, a retracement. If you took the continuation short without the quant line or bias, you did get a first target. If you took the continuation short, a retracement, and the move down, stop out. You took the retracement, the continuation down here, it went 4 ticks, stop out. So by staying very conservative, trading with bias and with the quantitative analysis line, saved us 2 losers here. And this first target trade, $50, 2 $300 losers. Now we got the crude market to give the inventory report. I almost took this trade. We did have quant confirmation. We didn't have bias. I let it go. I let the market retrace, and it did consolidate. And I took the reversal candle out, and it would have just taken us out on this wick. Then I closed on this reversal candle, on this entry, took a 4-tick loss. The trade never stopped out and went down 20. Now this was oversold. Didn't want to take the continuation, but it just slammed down again. I mean, there's no way of knowing when you're on the right edge whether or not you want to take an oversold trade. That would have been another 22. And in fact, if you had a crystal ball and knew the market was going to be heading down, you got yourself another 26. But there's no way of knowing it. This was the trade, and it was the 20-tick trade. So for the day, we sidestep a lot of potential losers by trading with this line, which does the quantitative analysis of multiple correlative markets, trading with our background bias, and trading with market profile, which I'm going to show you in a minute. It's just about ready to be released. So we had 5 trades. If I could spell. We had 3 winners and 2 losers, and one of the losers was very small, and we had very big winners. Crude 20 ticks. We had the 8-tick loss on crude right here, the 4-tick loss on crude right here, which if I didn't take the reversal would have continued for a winner. I had a 5-tick first target, and then 17 ticks on the Russell. Now on the 20-tick, we took one off at 5, one off at 10, one off at 12. Then we had the 8 and the 4-tick loser. Then on the 5, we had 1 contract off at 5, 2 off at 0. Then on the 17, I closed it early. The Russell just didn't want to go. It came back. I took 1 off at 5 and 2 off at 6. So I cut our profit, which we would have had 1 off at 5, 1 off at 10, and 1 off at 11, pushed our net equity up, but I didn't want to take the risk. I mean, it's nice to know beforehand, and actually the 17 ticks on the Russell. I'm sorry, we do have it right here. It's 20 ticks. So we had net ticks of 30, net equity of $130. Auto had no trade so far. It was a very difficult market to trade and a very difficult market to extend out any risk. Closing on the reversal candle cost us $100. It wouldn't have been a lot, actually more, 120. Staying here would have given us a nice trade. This oversold trade would have been nice. I probably should have taken this trade. The C candle entries are very powerful. The single candle, C candle, the C candle entries are very powerful entries. And you can see it just plowed down, especially with quantitative analysis. Now let me show you the market profile. It's just not ready yet, simply because of the fact that it brings in data, and depending upon how much data you accumulate each day, it's going to project a different market profile for everyone. And that's the problem with the GOM market profile. It accumulates volume when your NinjaTrader's open. And if you compare it with somebody else, you're going to wind up in a situation where your indicator is not going to be the same as their indicator. They have to accumulate the exact same amount of volume as you do. So let's just move this off to the side here. And let's take a look at crude. And you can see we have a value area high. I'm sorry, we have a point of control. There's our value area high. There's our value area low. I took this short trade on crude right below the value area low. Closed on the reversal, probably shouldn't have, and down we went. Now this one was a little riskier. If we move to the right edge, when you have to move to the right edge, almost 2/3. This is almost had the value area low right behind it, and was a very nice trade to the short side. But it failed. And this is our market profile. We're simply working on it to make sure that it projects the same data as everybody else's. So that's it for the day. We've had 3 winning days in a row. We've had a couple of losers, but most of those losers have been small, and our winners have been huge. We have about $1,200 to $1,300 so far in net equity this week, and still pushing 2 more sessions to try to get to $2,000. So sign up for a free trial to our trading room. Go to www.rightlinetrading.com. There you'll see a link to our daily net equity in the trading room, our link to our contact us page, and the link to the sign up for a free trial link, and the link to our 2 autos. And you can see their performance, the ES, Russell Golden Crude Auto Trader. You can email us at info@rightlinetrading.com or call us at 1-855-765-6681. So I hope everybody has a great afternoon. We're going to be having a webinar on Thursday, the 18th, at 4:15 p.m. We're going to show you more about our market profile, which is soon to be released, and also about the quantitative analysis of correlative markets indicator, which has really been superlative and worked tremendously well for us. It filters trades great. And if you don't have the correlative markets with you on a trade and you extend yourself out, the chances are that you're going to walk into a loser. So I hope everyone has a great afternoon, and I hope to see you in the trading room tomorrow. Take care.